Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of business finances. And let me tell you, BUUU Group Limited's latest filing has some interesting things to unpack, especially for anyone wondering where their money is going. So what is the big story here? Well, BUUU Group Limited is an events company that recently went public, and while they are showing revenue growth, there are some significant financial and operational shifts happening that we need to explore. And yes, we will be diving into those financial tables to see what they really mean. This company, BUUU Group Limited, is based in Hong Kong and they specialize in putting on events and stage productions. Think conferences, parties, and major exhibitions. They have two main services, event management and stage production. And it looks like event management is where most of their money comes from. Let's jump straight into the numbers for the year ended the 30th of June 2025. Revenue went up by about 9% to over $6.3 million compared to the previous year. This sounds good, right? But when we look closer at how they make money, event management services accounted for over 83% of their revenue. That is a big chunk. And it means they are really reliant on that part of the business. Now, stage production services actually saw a decrease in revenue by about 7%. So while the overall revenue is growing, the stage production side is shrinking a bit. This could be due to the economic downturn affecting clients' budgets for these services. What about the cost to make that revenue? Well, the cost of revenue remained pretty stable at around $4.4 million for the year, ended the 30th of June 2025. But here is an interesting point. For the year ended the 30th of June 2025, they had a significant increase in gross profit by over 30%. This jump in profitability, it seems, is because they handled some big event meant projects using only their own staff. This means they did not have to pay subcontractors, which of course saves a lot of money. Looking at operating expenses, things got a lot more expensive, specifically general administrative expenses, nearly doubled, going from about $471,000 in 2024 to over $935,000 in 2025. A big reason for this was a massive increase in legal and professional fees, soaring by over 2,300%. This is largely due to audit fees for their IPO application and ongoing compliance costs as a public company. This is a common trend for companies going public, but it is a substantial jump nonetheless. Even with the revenue increase, and improved gross profit, net income actually decreased by about 9%, going from over $880,000 in 2024 to about $799,000 in 2025. This drove OPIs mainly because of those soaring administrative costs we just talked about. Now let us look at cash flow from operating activities. The company brought in about $336,000 in 2025 compared to just $87,000 in 2024. This improvement in operating cash flow is a positive sign, showing better cash generation from their core business operations. When we look at financing activities, things look a bit different for the year ended. The 30th of June 2025, there was a large outflow of cash due to dividend payments to shareholders totaling over $500,000. This is a big payout and it reflects a change in their capital strategy. Now let us talk about the risks. The company points out they operate on a project by project basis, meaning their profitability can vary a lot from one job to another. And they admit they do not always have all the information on customer creditworthiness, meaning there is a risk of not getting paid. They also highlight that their services are not typically covered by long-term contracts, so customer retention is key, but not guaranteed. A major risk they raise is related to trading their Class A ordinary shares on national exchanges. This is due to the Holding Foreign Companies Accountable Act, or the HFCAA, if the Public Company Accounting Oversight Board cannot inspect their auditors for 3 consecutive years, their shares could be banned from trading in the US. Their current auditor is based in Singapore and is subject to PCA-OBI inspections, but the risk remains that future issues could arise. This is a significant concern for any investor in US-listed foreign companies. On the governance side, they have adopted an insider trading policy, which is standard practice. They also have a dual-class share structure. Class B shares have 20 votes per share, while Class A shares have only 1 vote. This means their controlling shareholders, Ms. Nana Chan and Mr. Y Kwong Poon, hold almost all the voting power through BUUU services. Limited this concentration of voting control means that other shareholders have very little say in major company decisions, which is a point to watch. Looking at leadership, Nana Chan is the chairperson and Y Kwong Poon is the chief executive officer. Both have extensive experience in the mice industry. However, they also acknowledge their management team lacks experience in running a US public company, which could pose challenges as they navigate new regulations and investor relations. Let us revisit the financials. Net income attributable to equity holders of the company for the year ended the 30th 30th of June 2025 was about $793,000. This is down from nearly $834,000 in 2024. The decrease is mainly due to increased administrative expenses like legal and professional fees associated with their IPO journey. BUUU Group Limited is seeing revenue growth and improved gross profit margins thanks to some strategic project management that cut costs. However, their sharply increased administrative expenses are a direct result of going public and will likely continue these costs along with the reliance on a few major clients and the risks associated with foreign company reg. Asians place a good amount of uncertainty on their future performance. The dual-class share structure also means minority shareholders will have limited influence on the company's direction. In short, BUUU is growing its top line and managing costs on specific projects well, but new public company costs and industry-specific risks are definitely factors to consider for any investor, and that is our breakdown of BUUU Group Limited's late. Saint Filing, what are your thoughts on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.